and see if...
Alrighty then. It is April 5th with mobile mailbox money. We're first quarter of 2024. I'm here with Elijah. Elijah, if you could just introduce yourself to the viewers here.
That's right. What's up, viewers? My name is Elijah. You can find me on Instagram on my tag FinanceguyEli. It rolls off the tongue. It's super easy. Yeah, nice to be here. Always a pleasure, Alden.
Absolutely. Well, for the people that don't know you, Eli, what's kind of your background? What are you focusing on? Because we're here on mobile mailbox money, and it's real estate education, finance, looking at the market analytically. So happy to have you here. So for the viewers that don't know you, if you could just explain a little bit about what you do out of the market.
Yeah, no. So my career and its relevance to real estate in particular. I focus on the finance part of real estate, in particular right now, the insurance side of the finance side of real estate. So I've been doing that for about 4 years. There's a lot to it, both on the life and the property and liability sides of insurance, all of them intertwined in real estate and many different ways and many different writings, whether it be the property itself, personal protection, business. It's quite a bit, and there's just a lot to dive into there. But that's kind of my background into it. That's how Alden and I came across each other, was our interests and similarities and our passions in real estate.
Absolutely. I think we met at the Business Network International meeting. I'm actually a member of that specific chapter now. The connectors, we meet at Orange Tree on Wednesdays. I've seen a tremendous amount of business from that group. I happen to meet Eli in there. So it's always good to get out and expand your network, and I'm happy to have met you. We had talked previously about some potential infinite banking strategies that I thought that was a really cool item to be able to have a vehicle to park money in your own policy and borrow against that policy and ultimately be your own bank. And that's what we do here at Mobile Mailbox Money, to some fashion, being your own bank. It's not an infinite banking strategy, but we're banking in manufactured home notes, and Eli's well-versed in residential real estate and things of that nature. So he's actually a backhouse member of ASREA, part of their program, Arizona Real Estate Investors Association. I'm an avid member. I've seen Eli out there frequently, and you help grow their attendance.
Yeah, so it was it's membership association development. It almost feels like the job description's in the title almost, but basically just membership acquisitions, like making sure the association's growing, being creative with how we do it, go about it. So I went representing ASREA through the association BNI. Visited many strong chapters. Alden's is fantastic.
Visited every chapter in the valley.
You'd think so. Every now and then I'll come across people that are like, "Oh, I'm at this one." I'm like, "Oh, I haven't been there yet. I've seen it, but I'll see you there sometime soon." But no, it's an awesome association. It's how Alden and I definitely came across each other, and we were able to, as a matter of fact, expand more from there. Like, I mean, we've spoken about so much. We've talked about investing money, writing notes, investing in mobile homes and what that looks like compared to other traditional real estate, let's say, because I would say this is a niche in the real estate world.
Absolutely.
And like insurances, like infinite banking concepts and whatnot. But you actually brought up something just now that I think is a very important theme in not only entrepreneurship and real estate and business in general, but networking, like that right there.
Networking is key. I mean, what's the saying? Your net worth is in your network at the end of the day. And Eli attends all kinds of different conferences and associations, and he's turned me on to a few out in like Newport, the Newport Social Club.
No.
Then there was one or two others. But I've attended, a couple national conferences as well. And, the proof is in the pudding at the end of the day. If you're not out there shaking hands and, putting your brand and getting that brand awareness with other individuals that are executing in a market, opposed to just sitting back and educating, that's great to do. And ultimately, you'll end up drawing up different deals that you hadn't, originally had on the whiteboard,
right?
Because you ended up, rubbing shoulders with an individual and caught up again. I just happened to attend a Mobile Home Institute, manufactured housing industry's largest conference in manufactured housing community ownership, and we were talking to a broker there that we had been introduced to about 6 months ago. He's like, hey man, what's going on with that one community that we had a interest in, and the buyer happened to back out, and they didn't even let us know. So just so happened that we were happened to be there, have conversation, just kind of really open-ended, not really looking for anything in the conversation, but ended up having an advantageous opportunity come up out of just kind of shooting the shit, pardon my French.
Right.
But, that's where business is done at the end of the day. As long as you're an established individual and actually doing deals, networking is probably the thing that's going to catapult someone's career into the next stratosphere. And that's tough when trying to step out of day-to-day operations, and have the available time and effort and energy to go out and actually make a relationship out of a potential opportunity, or attend these conferences where, the phones are still ringing. You have to have that strategy of stepping out of day-to-day operations, as Azria has done. They've grown to exponential. Michael Del Pre is now helping grow their association. So, the proof is in the pudding. I mean, going out and networking, that's Business Network International's full program.
Very true.
Getting out and building relationships and ultimately trying to provide someone some value at the end of the day.
Very true. I think you bring up a good point there too, as far as having to incorporate it and really focus in your schedule, and having to separate yourself to have time to do it.
Absolutely.
I've seen so many people do this in BNI, and really you come to a fork in the road, and some people I personally think make everyone makes these decisions for whatever reasons. I have no idea what all of them can possibly be. Some of them personal, some of them not. But here's what I normally see in BNI and the fork that normally comes. They get so busy that they feel they can no longer come to BNI anymore. Guys, you've given me so many referrals. I went from 0 to 100 and I just don't have time to be here anymore. And it was great knowing all of you. I'll still take your business.
Yeah.
I'm starting a chapter right now. One thing they told me, they told us a lot. The one thing they have said is visibility is a huge part of BNI, and the BNI memory is 2 weeks. If you're gone for 2 weeks, you're gone. The next person's in, they're visible. They're talking about their business. They're taking the opportunity to connect. Yeah. So the fork in the road is leaving, and now you're losing that business. You're kind of banking thinking you're going to keep it, but it's like, you came in for 8 months, you were a kick-A electrician, you did a great job, you got good referrals, but did you participate that much with the people that were expecting to do business with you? Not even so much like, hey, can you come work on my house? But hey, I'm working on this guy's house. He said he needs a new kitchen. I just kept that to myself. Right. It's like, no, you could have called 5 people in your group to talk to about that, built your net worth, and from there, they would have given you more referrals. And the other option in that fork in the road, opposed to leaving, is now hiring help. Right. Hiring help and how, minimum wage out here, let's say not even minimum wage. Let's say giving someone like a decent salary in Arizona, $55,000, $60,000 a year.
Well,
you're telling me
that's easier said than done.
It is.
Now
it is.
Some payroll and things.
It is. Let's say 1099 then. For the entrepreneur, you can find someone 1099 where if you're a business owner and you have other things that are worth doing, you can hire on someone, give them a decent, let's say, small salary, and they can do a little bit more than just network. And networking, that's going to bring in the referrals that you were getting before. You're not losing that seat, you're still maintaining that business, and that's something that's needed to keep it going and to keep it moving forward.
100%.
You want to duplicate and replicate something that's been proven successful more so than just drop it altogether. So, option A, let's say you have the capability, you're right, it is a lot but it's easier said than done. Very true. But for the individual entrepreneur, let's say it's a hairstylist that has family and has a little cousin that's like, hey, I'm done with high school. I'm in community college. I've got my Thursday mornings open and I can make an extra $50 a week, going to this for my cousin,
sure.
And networking for her. And that's building her book now even further. Let's say she's a real estate agent.
Yes. Listen, the fact of the matter is visibility is key, and that comes with BNI and Azria
And getting out there and networking.
and getting out there and networking and not losing sight of, where the business actually originally came from, and making sure you're cultivating those relationships, because people do business with the people that they like and trust. Being good at your job is only so good and only goes so far. If you're a dick, or whatever, pardon my French, then someone's not going to want to do business with you. And if you're out of communication for a extended period of time and you don't have a regular follow-up or whatever that may be, people end up going with the next guy that's in their ear, maybe on a weekly basis or whatever, like, hey, there's a lot of business professionals in every industry,
How many more chances can you give on the guy you like? It's a combination pool of a bunch of things, communication, attentiveness, synergy. You're right, how well you work with them, how well you like, because honestly, I see it even more so when I find people I want to do business with. Now BNI has given me a different perspective of it. I'll throw it out there where before, let's say I never kind of discovered what BNI was, and I continued on my career doing what I do, and I've got something up with my house. I'm going to go to Yelp, I'm going to go to wherever, I'm going to call an electrician or a plumber, and they're going to get the job done, and I'm going to hope they do a good job, and maybe I never see them again, or maybe I call them a handful of times because I'm really pissed at the job they did. Where now at BNI, it's like, not only am I... yes, they have the trust because of everyone else vouching for them in a sense. And also they've probably done quite a bit of work there too. But that's an opportunity for me as an entrepreneur. That's a plumber. Like, hey, well, as an insurance advisor, well, what's there? That's a plumber who's got a business, who has a license, who needs business insurance, who probably has a family. They all have insurance needs. Whether or not I actually do business with that person, I have the opportunity to be in front of them
and get trickle-down referrals, or whatever it may be through their contact sphere.
Yes, because
happen to talk to them that week.
The odds are no one is best friends with their insurance agent. Yeah. So there are a lot of insurance agents out there, but guess what? Not everyone's best friends with them. BNI gives you the opportunity to be best friends with anyone that's working on your stuff, and that is awesome. Networking really in general does, but BNI I think is an association that has a great foundational approach to teaching people how to network.
Let's switch gears here a little bit. And I know your significant other has a background in finance. You're in finance. What are you guys seeing as far as residential real estate, possibly maybe a touch on the stock market, or, do you have anything to add to the current financial market? Or maybe a prediction, where can we kick off that light conversation as far as in that realm?
Yes, of course. Let me give you all the guarantees. Here's my first guarantee. The disclaimer is I'm not a financial advisor. I am an insurance advisor. I am pursuing those licenses. I would like to become a financial advisor, simply to just speak on these a little bit more, because I have my opinions, not my advice.
No, there's analytically a way to look at the market right now, what's going on. Median single family prices are at $400,000 a year. Interest rates are at 7-8%. Just to afford a $400,000 purchase and qualify, an individual has to make $80,000 a year with little to no debt. So what's the median income of Arizona, just in particular, is $58,000 a year in combined household income for median in Arizona. The employment, the compensation for employees and labor hasn't gone up in correlation with residential real estate pricing. We just came off such a low interest rate. It's an interesting market, and I kind of threw a couple of things out right there in particular. But the shortage of residential real estate is a factor, and the 2-year gap in new builds from COVID has created another factor to account for in the affordability of residential real estate, as well as what's currently on the market, why we're seeing not that many homes go to foreclosure, as they're saying the market's not that great and people are living more on credit cards, but they're locked in at that 3% mortgage. And if they lose that house, they have to go rent for more, or, whatever it may be. It's an interesting time here in the market across the country, as well as in the local market, touching people in Arizona Real Estate Investors Association and getting the local analytics that come with that program of local fix and flippers and buy and hold, and then piggybacking that with MHI that I just attended, with the institutional investment houses investing in affordable housing, because they see the turn in the next 10 years of individuals not being able to qualify for a purchase. Well, they'll give them ownership in a mobile home park. So they're buying residential properties at all-time highs. Now they're hedging their bets with affordable housing and mobile home parks. It's an interesting time. And then the variable rates of commercial multifamily financing that we're taking out, that's going to have a factor of potential acquisitions in multifamily and things of that nature. So not to rant too much. Those are all big top level items that are being discussed right now on institutional investment houses, people running funds, building multifamily. There's crazy amount of cranes here in Tempe still. They're building like crazy. BTR is going crazy. People are raising all kinds of money to build to rent single family properties. I mean, labor is tough to acquire. There's not all that much skilled labor.
It's all over the place, to say the least.
That was all over the place.
Well, but I mean, the real estate market is all over the place. And you bring up a lot of good points.
Those were touched on a few.
Have you read The Richest Man in Babylon?
I have not.
So I'm not going to give any of the names of any of the people in that book because they're ancient Babylonians.
Sure.
And my day-to-day people don't have those kinds of names. Jimmys and Timmys. I don't mean... I can't even. I won't even give it a shot. But I will say this: there are a handful of good stories and points, and one of them I think is relevant to the mindset and the market in general. So, in the book, they have these masterminds in a sense where they'll meet at the town hall, and it's very open. Everyone's coming to really pick the mind of this one person, and they have a group discussion. And people range from, let's say your standard Taco Bell worker to your mailbox money investor. It's a range off the spectrum of people that would come to learn from this guy. And one of the topics was, how do I draw the attention of Lady Luck? Earlier today, I found a purse that jingled full of gold coins. And he wanted to know, how can I get more attention from Lady Luck? How can I make this happen? And he thought it was an interesting topic and started asking the group, all right, everyone tell me your experiences with luck. Like, what are the bigger experiences you've experienced with luck? And without diving into each of those stories, a lot of them had themes. And the biggest theme, common denominator, was everyone was adamantly working. Everyone was adamantly putting in effort. They were they weren't focused on the goal, they were focused on the process. And it was your person that was investing. It was your person that was actively working, going out and looking for opportunities. And the point is, Lady Luck likes to find those who are actively working, not those who are just sitting around.
Right.
So in this market, with all these rates and everything, I just see it as like, well, opportunity and Lady Luck is going to come while you're working and when you least expect it. It's not going to be when the news is telling you rates are at an all-time low.
Right.
Because a creative financing deal is good. Doesn't matter what the rates are. It really doesn't.
Which is buying a property subject to and assuming that mortgage on payments, because the mortgage lock that we've seen from 3 to 4% mortgages to millions of Americans anyway.
But so, I mean, those opportunities are great no matter what the rate environment is, no matter what the general is, because most people aren't looking at the general numbers because they're not, they're not on this kind of level. They're working to get to this kind of level. You're working to get there where they can handle, like, okay, if I can flip this many in a month, now I got to look at the numbers. Most of them are just trying to get to the first one, maybe even the first two.
Sure.
So,
which is the hardest one.
Exactly.
First one's always the hardest one.
But
I love that point about Lady Luck and finding a deal, or at the end of the day, you're not going to get lucky unless you're a creature of the process. And, ultimately being infatuated with the ins and outs of the deal process in itself from beginning to end, and being available for an opportunity that really, if you didn't have the understanding of those processes, it wouldn't have looked like an opportunity to begin with, because you didn't know how to capitalize on it, or the resources, or the advisors, or the mentors.
That's another really good point. Education is another real good theme, kind of in the gist of, like, how to be successful in real estate, I suppose, if you're kind of looking at that as the general gist. Education, very important.
Successful in any, industry at the end of the day, not just real estate. There's education behind stocks and, investing in mutual funds, and hedging your bet with, these specific assets. That all comes with having the available knowledge of how to accurately take a risk mitigation in your want for success at the end of the day, or an acquisition, a cash flow, subject to purchase, all of that, it's proof in the pudding of the individuals that are the most educated and still out actively procuring the process are the ones that are going to have Lady Luck show up on their door. It's not the most educated. It's not the person that's sitting back and waiting for the opportunity. It's the individuals actively educating and in the deal processes, and that sees an opportunity that was covered in dirt at the beginning and no one else saw it, and you pierced through and made the deal. I mean, it's easier said than done to have the available knowledge, the resources, the capital, the
know-how,
mentorship, the know-how, the processes, the documents. I mean, there's a lot that goes into doing a deal at the end of the day.
And that person too that you described, that's like the business that's saying, when you're 18, give me your 4-year degree and your 10 years experience, like that person is cultivated. And there's two types of people, I guess, to make that person. There are the bookworms, let's say, like those who let's say can read up on the knowledge, but don't practice it that much.
Sure.
And then there's the other side of the coin, which is those who just want to, like, they want to go learn by experience, hands-on. Like, I don't want to read about it. I don't want to learn from other people's experience or mistakes. I want to go make my own and go from there. There is a healthy middle ground on both of these people, for sure.
Which is few and far between.
Exactly.
To find that middle ground and be able to balance, those two. I historically wasn't a books person. We were sales, buying and selling. We didn't have a background in finance, but that came with the aggressiveness of one side of the paper and the need to evolve in an ever-changing market that came with that, So anyway, everyone starts somewhere at the end of the day, and, I'm not here to tell someone to do one thing or the other, but it's good to see, as far as analytically, what's going on in the market and other associations to parlay what's going on financially in the country, and ultimately to prep and get into that processes, intimate knowledge of, maybe a niche item, whether that be residential real estate or options trading, or there's a lot of people I talk to about crypto, mobile home parks, multifamily. The asset class is wide, and no one's a jack of all trades. So trying to niche down is important to get to a specific, goal and mindset of what you're offering or service or whatever, and then hit those associations strong.
Right.
Know your process and always be educating, because listen, I learn new things every day of the week. That's important.
I tell people it's important when you niche down try your best not to get burnt out too when you're niching down. Like, I mean, when I started with life insurance, that's how I ended up with real estate. Is I pushed I didn't, not that I pushed it, but I pushed myself on the education of infinite banking, its applications, its concept.
Which is niche,
Yeah,
way niche.
that's super niche.
Awesome.
And it is niche. It does cast a wide net. People talk about it in how to reduce your debt and how to reduce your tax bill and how to buy real estate and how to fund retirement. There are many applications to it, but the point is,
if you're interested, you can reach out to
you heard my tag, FinanceguyEli on Instagram. But no, really, it is out there. It has its applications, but it's not for everyone every time. Eventually maybe someone comes, eventually it may be good for someone later, not now. It may just, or maybe mindsets don't match up, or maybe just feelings. There's many reasons again. But
you know what I like about infinite banking, which it's a niche kind of within a niche, is taking out a policy and doing the infinite banking strategy and borrowing that money to buy a cash flowing asset. Why do I like that, Eli? Because you're paying yourself as the bank. Yes, you had to have the initial capital to open the policy, right?
Right.
You had to have the 80 to 100 or, whatever minimum is required, maybe something around there, just hypothetically. And you can borrow against that policy from yourself, from your policy, at what are the rates that they borrow against? It's something nominal, like 8% or 5%, something like that.
Very nominal, and it's variable too from there. Depends on your provider, depends on if you have a policy, look for the key words loan provisions and then dive into that.
What's interesting, not to cut you off is to parlay that, which my strategy is mobile mailbox money, and that's acquiring notes that are cash flowing, qualified, and consummated, that are outpacing inflation with the rate of return that they receive on an annual basis. And it's secured by an asset, as well as provides monthly cash flow payments that are third-party contract service. So payments come in every month. The buyer was Dodd-Frank compliant, which means they were qualified. There's 600 plus credit, these criteria, no evictions, verifiable income. Long story short, you take out a policy, infinite bank that policy, right? And acquire that note with the loan that you've taken from the policy, buying the note that's a higher rate of return than what you borrowed from yourself. And those payments go back into the policy, and you're double dipping on your investment strategy. Wow, Eli, who knew you could do that? How crazy is that? I really like that idea. Now, you got to have the initial capital outlay, right? Which is a challenge with some, maybe most, having that vision as well as the pipeline to know when you go and not burn that 80,000, but put it in the policy, then you can't take it back out for frivolous spending. Right. You have to have a specific asset that's secured for that loan, so something of that nature.
Yes, no. I like your approach. So that's where I like the customization of the concept. Is it's applicable to your situation. Alden has a very niche category, and he took a niche concept and he created a system with it. That's a working system with it. That's amazing.
They could acquire other things.
Yeah, so that's where it would come into play with debt. Let's say someone does have 25% of their credit card debt and they just got their tax refund, and they're like, damn, do I pay $5,000 down straight to the credit card company, or do I put 50 or 5,600, an extra 600 into a life insurance policy, borrow out what I need to pay for the debt company, and now I've got a policy with the cash value still building in it, still accumulating, and I just eliminated the debt and all the interest that was owed on it.
Yeah.
My interest just went from 25% down to 4.5% a year.
The policy you borrowed from still doesn't lose the 8,000.
Correct.
Or 5,600. Sorry, I don't know where I got it.
It doesn't lose the value, the
Doesn't
cash
lose
value.
the cash value that you originally put it because you're borrowing against that
Correct.
collateral.
Like, so there's a lot more key terms there. Cause like, see, this isn't every provider. Like some providers will be direct versus non-direct. Those are two other key terms that you're going to want to keep an eye out for. Some of them will be both. So I'll give an example with Midland. They have a pretty awesome product. I'm disclaimer, I'm not being like, I'm not promoting it in a sense. I don't write it, but I'll talk about it because I have before. So you do have the options when you're taking the loan out for it to be direct or non-direct, and that's based off of whether it's a variable rate or fixed rate. And those two terminologies basically mean if you borrow the money out, are we going to leave the value? Are we still going to let the value be vested? Like the full value be vested. Let's say there's 10,000 cash value in there, you're borrowing out 5. Are we going to leave the full 10,000 to accumulate 5%? Or are we going to take out that 5,000, from what would be considered to be given a dividend on, and just credit them off of the 5,000 in there? So Midland does it based off of whether you choose a fixed rate or a variable rate when borrowing money. Other providers will do it. They won't even give you the option. They'll just say, hey, this is a non-direct product or this is a direct product. And they may not even give you fixed or variable options. There's pros and cons with each one. Each one has their own dividend payout. Each one has some are whole life, some are IULs, that's even types of products, but that's not so much providers. But I would say mainly focus on the provider, see how they write their contracts, because insurance in general, foundationally, it's contract. It's contract between you, the individual, and the insurance company. And each side has to uphold what is written down in the contract.
Contractually binding.
There you go.
It's important to have things in writing, that's for sure.
Alden, dude, I have to go run and catch the misses, but dude,
hey,
this is awesome.
This is Eli. Just introduce yourself one last
Yes,
time.
finance.
Close out.
Yes.
Tell them where to follow you.
Finance guy Eli on Instagram. I'm the guy with the smile on his face and the mustache on his lip.
And I'm Alden Guajardo with Mobile Mailbox Money and Silvercrest Opportunity Fund. We provide real estate education, market analysis, as well as attend national conferences in order to find the institutional investors and ultimately ride the coattails of individuals out here procuring passive income, aggressiveness in the marketplace for real estate, stocks, insurance, infinite banking, and all the above. Eli, appreciate it.
Dude, Alden, always good to be here. I want to touch on it one thing. If you are looking for options, you're just wanting to get educated on what it looks like to invest in real estate, you just have questions on it, you got a group together, you got 4 guys or whatever, and you're just like, hey, questions. Great guy to go to for questions.
Hey, appreciate that. Couldn't have said it better. Have a great day.
Great being here.
Dude, that's awesome.
Yeah, that worked.